Love for accounting. In today's video, we will talk about the elements of financial reporting. Let's dive right in. Last time, we have an overview of the IASB conceptual framework. In the second level, the framework let us know what to report in financial statements. The elements of financial reporting include assets, liabilities, equity, income, and expenses. Today, we will look into these three items first. Assets is a resource controlled by the entity as a result of past events and from which future economic benefits are expected to flow to the entity. Resource, something. Whether it is tangible, that is, you can touch it physically, or intangible. Controlled by the entity. Generally, if you own it, then you have the right and ability to use it. But there are things that you have no ownership, but you can use it for your own benefits. For example, a long-term lease contract. Past events. Ownership and control is obtained already, not in the future. Future economic benefits. Holding the assets must help an entity gain money. If not, the asset should not have any value. For example, if you expect that no one would buy your goods, those goods should be valued as zero. Flow 2. Let me give you two examples. After goods are sold on credit, you expect your customer, who now become your trade receivables, will pay you the amount soon. So, trade receivables is an asset. After you buy a new machine, you expect to use it to produce goods for sale, which ultimately turn into cash. So, machinery is an asset too. Some examples of assets are plant and machinery, motor vehicles, inventory, trade receivables, prepaid expenses, cash and bank. Liability is a present obligation of the entity arising from past events, the settlement of which is expected to result in an outflow from the entity of resources embodying economic benefits. Obligation. You can understand it as the concept of owing. The word obligation is not just a fancy word, it extends the idea to include owing that is expected to exist, like warranty. It is from things already happened as well. Resources embodying economic benefits. To settle liabilities, we need to use our assets. Settlement results in an outflow. Again, two examples. After we enjoy a service, we owe the service provider and we need to pay them cash. This we call an accrued expense, a liability. How about warranty that we have just mentioned? We sell goods and we promise to replace defective items within a certain period. This promise is an obligation, a liability too. Some examples of liabilities are trade payables, accrued expenses, bank overdraft, bank loan, provision for warranty. Equity is the residual interest in the assets of the entity after deducting all its liabilities. Simply speaking, it is what you have minus what you owed. You can understand it as the net value or the net worth of an entity. If it is a business, it is also the value of investment the investors are entitled to. Next time, we will continue with the remaining two elements, income and expenses.
I love accounting.